History of gold ETFs. When people think about gold ETFs, most immediately think of GLD. But the story actually begins earlier and in a different part of the world. The first gold ETF was launched in Australia in 2006 under the name Gold Bullion Securities. This was the true pioneer. It introduced the idea that physical gold could be packaged into a tradable financial product. Investors could gain exposure to real gold without ever touching it. This idea quickly proved successful and began spreading to other financial centers like London and eventually the United States. The concept was simple but powerful. Make gold easier to access, cheaper to hold, and standardized across markets. And once this model proved it worked, adoption accelerated rapidly across the globe. Role of organizations. But this transformation didn't happen by chance. Key organizations played a major role, especially the World Gold Council. Their mission was to promote gold as an investment, and they understood that accessibility was the biggest barrier. They supported the development of ETFs by providing research, data, and education. They helped investors understand why gold matters in a portfolio as a hedge, as diversification, and as a store of value. By doing this, they reduced uncertainty and built trust. Investors weren't just buying a new product, they were adopting a new way of thinking about gold. This institutional support was crucial. Without it, ETFs might have remained a niche idea instead of becoming a global standard. Impact on investors. The result of all this was a dramatic shift in investor behavior. Gold ownership became easier than ever before. Instead of dealing with physical logistics, investors could now simply buy and sell shares. This also standardized how gold was used in portfolios. It became a regular allocation, just like stocks or bonds. Portfolio managers could now include gold strategically, adjusting exposure based on market conditions. And perhaps most importantly, global demand increased significantly. Because when something becomes easier to access, more people participate. And when more people participate, the entire market changes. Gold was no longer just a traditional safe haven asset. It became a dynamic, liquid, and actively traded financial instrument.